Yes, the question in December 2023, which is the question number 3. I've already shared that question with you in the class WhatsApp group. So let's just go through it. We see what the examiner was requiring as far as that question is what is concerned. So the question reads, that is question number 3. It reads, R and M were partners in the business of buying and selling fruits for two activities, export and oil processing, sharing profit and losses in the ratio of 2:1 for R and M Limited respectively. The partners agreed that with effect from 1st of October 2023, the business to be split off and transferred to two separate companies, P Limited and Q Limited. To be transferred to two separate companies, P Limited and also Q Limited. So we are told P to cover the fruit buying for export business, while Q Limited took over the fruit buying for oil processing business. So then we are told that the partnership statement of financial position as at 30th of September 2023 were as follows. So what you're given there is the statement of financial position of this particular partnership as at 30th of September 2023. So therefore, that is when the financial of the partnership was coming to an end, 30th of September 2023. And also, I hope you have noted that from the information we are given in paragraph 1, this particular partnership business was to be converted into a limited liability company from 1st of October 2023. That is exactly after the end of this particular financial year. So we are given the statement of financial position. First of all, we have the non-current assets, which include land and buildings, motor vehicles, equipment. Then we have investment property. We also have the current assets, which include cash in hand. We have the trade receivables for export and also for oil, inventory, export, and oil. We have the total asset. And then we have the what? We have the capital capital and liabilities. First of all, we have the capital for R and for M. We have the current account for R and M. Then we have non-current liabilities, which include bank loan. We have current liabilities, which include bank overdraft. And then we have the trade payables for export and for oil. Then we have the total capital and what? Liabilities. Then we have some additional information here. Number 1, you're told P Limited to cover all the non-current asset, cash, bank overdraft, and its share of trade receivables, inventory, and trade payables. Q Limited took its share of trade receivables, inventory, and trade payables. The assets and liabilities were transferred at a book value, and partners were paid 300 million, being the goodwill for oil business, and 240 million being goodwill for export business. Number 2, the bank that had provided the loan agreed to accept for 43.2 million 10% debentures in P Limited and 28.8 million of 10% debentures in Q Limited. 3, on 1st of October 2023, the purchase consideration was settled by allotment of fully paid ordinary shares of shillings 20 each in respect of companies, the companies as follows. So we are given the amount which was to be paid to the two partners. Remember, that partnership had two partners, R and M. So we are given the amount which was to be paid to them. We are going to come back to that. And then number 4, we are told that P Limited also raised 12% debentures of 600 million on 1st of October 2023 and paid off the bank overdraft. The expenses incurred in raising the 12% debentures amounted to 21 million. Number 5, we are told P Limited and Q Limited also issued 3 million and 4.5 million fully paid ordinary shares of shillings 20 each, respectively, to two companies, E Limited and also F Limited, on 1st of October 2023. 6, none of the company has amortized the goodwill. And 7, we are told the formation expenses were paid by the respective companies as follows. So we're given the formation expenses paid and also incurred and paid by P, 39 million, by Q, 24 million. So what are we required to do? Number 1, we are required to prepare the business purchase account. Part B, partners capital account. 3, part C, bank account. Part D, the vendors account. And then E, we are required to prepare the statement of financial position of P Limited and Q Limited as at 31st of October 2023, assuming no other transaction to place. So basically, this particular question appears to be a little bit tricky, but this was actually a very, very simple question, provided you can be able to remember. For example, how do we prepare the business purchase account? What do we record in the business purchase account? What do we record in the partners capital account? And so on and so on. So therefore, we need to answer that particular question. But even before we prepare what is required there is something we need to summarize here. We are told that this particular partnership business, which had 2 partners, the 2 partners here, as per the statement of financial position, were R and M. This partnership had 2 partners. And basically what you're told is that this particular partnership business was in business of buying some fruits. We can go back to the first paragraph. That's why we're given that information. That's why we're given that information in the first paragraph of that question. So we are told this partnership had 2 partners, R and M, and we are told that the partnership business was in the business of buying fruits. And basically, that is buying and selling fruits for 2 activities. For 2 what? Activities. That means that this partnership business was buying and also selling fruits. One, for export, and also for oil processing. That was what the partnership business was doing. The partners in this partnership business were doing. They were buying fruits they were buying and selling fruits for export and also for oil processing. Now, what you are told still in that first paragraph is that these particular partners, that is in sentence number 2, paragraph 1, the partners agreed that with effect from 1st of October 2023, which is immediately after the end of the financial year, the business be split. The business of this partnership be split off and transferred to 2 separate companies. Transferred to 2 separate companies, P Limited and also Q Limited. So in this case, we are told P Limited, this partnership business, which was undertaking 2 business, or basically buying and selling fruits for export and for oil, was the business of this partnership business was split and transferred to 2 companies, that is the P Limited and also what? Q Limited. So what you're told is that P Limited, the first company here, took over the fruit buying for export. So meaning that this company took over the business of buying what? Buying fruits for what? For export. In other terms, you can say that P Limited took over the export business. So it was now to buy and export what? Fruits. And then we are told while Q Limited took over the business of buying fruits for oil processing. So these took over the business of buying fruits for oil processing. So that is the first thing you need to understand, that the business of that particular partnership business was split into 2 and then transferred to 2 separate companies. P Limited was to take over the business of buying fruits for export. Q Limited was to take over the business of buying fruits for oil processing. It also means that those particular, because if we go back to the statement of financial position of that particular partnership, you'll be able to see some assets which related to export business, which related to oil business, and so on. So therefore, those particular assets and liabilities of the partnership business, which related to export, were automatically taken over by P Limited. Those assets and liabilities which related to oil, to fruit buying business for oil processing, were taken over by what? By Q Limited. That is the first thing you needed to do, what? To understand. And I think now, having that, we can now go straight to our requirement. What are we required to prepare in part A of that question? What are we required to prepare in part A? This is quite simple. We are required to prepare what is known as the business purchase account. Sorry, the business purchase account. The business purchase what? Account. This is very, very important. Accounts, not a single account, but account. So remember what we said is that a business purchase account, this is actually the main account which is prepared to open the books of account of the new company. But in this case here, we don't have a single new company, but we have two new companies. So the new companies is the P Limited and also what? Q Limited. That's why you can see the examiner required the candidate here to prepare business purchase account. So therefore, we are going to prepare two business purchase account, but automatically we are going to prepare them concurrently in columnar format. We need to prepare the business purchase account for P Limited and also for Q. For P and for Q. For P and for Q. So basically, these need to be divided into two columns, like that. Like that. That is our debit side. And this is our credit side. Is our credit side here. And then now from there, what we need to remember is what do we record on the debit and the credit side of this account? What do we record on the debit and the credit what? Side. I hope you can remember in our previous class, we prepared this particular account here, and we said what we record in the business purchase account is that on this side, that is on the debit side, number one, we record the liabilities which are taken over by the new company. So on the other hand, we also record the purchase what? Consideration. And then from there, on the credit side, we record the assets which are taken over. We record the assets which are taken what? Over. And then from there, we balance this account. A balancing figure on this side is goodwill. A balancing figure on this side is a capital reserve. Is a capital what? Reserve. And I hope you can remember in the additional information, we're given, for example, the assets which were taken over by P Limited and which were taken over by Q Limited. And also we are given the liabilities which were taken over by our two companies here. There is something which you are not given in this question. We are not given the purchase consideration, but I think there is a certain point there whereby we are given the goodwill. The goodwill which was paid to the partner. So basically what that means is that once we have recorded the assets, the goodwill, the liabilities, the balancing figure which will be on this side, it will represent what? The purchase consideration which you are not given. So therefore, what we need to do now, because we know that on this side, we record two items, liabilities and purchase consideration. On this side, we record the asset taken over. We need to proceed and do that. Remember, we are preparing the business purchase account for P Limited and also for Q Limited. P Limited and also what? Q Limited. So on this side, let's start by recording the assets which were taken over, because that those assets should be credited in this account. And the assets which were taken over, we have them in which note? We have them from note 1. So can we go to the additional information number 1? The additional information number 1. So in the additional information number 1, we are told that P Limited took over all non-current assets. This company here took over all non-current assets, cash, Bank overdraft. Bank overdraft, basically, that is a liability. That's what we know. It will go to the debit side. It also took over its share of trade receivables, inventory, and trade payables. And then you're told Q Limited took over its share of trade receivables, inventory, and what? Trade payables. So basically, we know the asset and also the liabilities which were taken over by each what? Company. So therefore, can we go back to a statement of financial position which we have up there? So in the statement of financial position which we have there, we need, first of all, to record those particular assets. So basically, first of all, we have the non-current asset. And actually, we are told all the non-current assets were taken over by this company. And actually, remember what we said is that when recording those particular assets in this particular account here, we record them at the amount at which they were transferred to. So these assets were transferred to the new company at which value. There is some information which are given as far as that is concerned. That is note number 1, sentence number 3. And you see that? Note 1, sentence 3, we are told assets and liabilities were transferred at their book value, at their book what? Value. So mean that all the assets were transferred to the new company at their book what? Value. So therefore, let's record those particular assets which were taken over. So mean that we go back to a statement of financial position and we start with an non-current asset. All the non-current assets were taken over by this company. So the first asset is land and buildings. It is also important to indicate that our figures here will be in thousands of shillings. Will be in thousands of shillings. Yes. So the first asset is the land and buildings, which was taken over by P Limited, and the value for that is 750,000. So no land and building was taken over by Q Limited, and then below that we have motor vehicles, which is still an non-current asset and therefore taken over by what? By P Limited. The book value for that is 300,000. Below that we have equipment. Equipment in this case were taken over by which company? Still by P, because these are non-current assets, 90,000. Then below that we have investment property. Investment property is still an non-current asset, which was still taken over by P Limited. So in this case, you can see we have captured all the non-current assets, and which we know they were taken over by what? By P Limited. So then can we go to where we have current assets? So where we have current assets, we have cash. Cash, as per note number 1, cash in hand was taken over by which company? Cash in hand was taken over by which company? As per the information you have in note number 1, I see whether we are together, whether we are following what you're given in note number 1. Cash was still taken over by P. Cash in hand was still taken over by what? By P. So we have a cash in hand, which was taken over by P. The cash in hand is 3,000. So then below that, you can see we are given receivables which related to export and oil. So you have now to remember what you have been told here, that once the business of this partnership business was split into two, this business for buying fruits for export was taken over by P. The business of buying fruits for oil processing was taken over by what? By Q. What does that mean? It means that those particular assets and liabilities which related to export were taken over by P. Those assets and liabilities which related to oil processing, or basically to buying fruits for oil processing, were taken over by what? By Q. By what? Q. Sasa? Yes. So therefore, you're given the trade receivables, and these were still taken over by the two companies. So what does that mean? It means that those particular trade receivables which related to export, receivables relating to export, were taken over by which company here? Were taken over by which company here? Were taken over by which company? Taken over by which company? Yes, they were taken over by export. Taken over by what? By P. Oil, taken over by what? By Q. So we have that here. So trade receivables for export, taken over by P. they had a book value of 384,000. And then for oil, they were taken over by what? By Q, 648. 648. 6 what? 48. 648. Someone is talking about the cost. At the asset were taken over at what? At book value and not the cost. So do we have any difference? There is no any difference because we are not given any differentiation. So the book values are those particular values in the statement of financial position. Yes. So then can we go to where we have inventories? So inventory for export were taken over by P. They have a value of 1380,000. The inventory for oil taken over by Q, 6 what? 675. 6 what? 75. 675. 675. So basically in this case, you can see that here we have recorded all what? We have recorded all the assets which were taken over. We have recorded all the assets which were taken over. And basically you have said that all the assets which are taken over in the business purchase account, those assets are supposed to be what? To be credited. To be what? Credited. And then those particular liabilities which were taken over, what do? We debit them in these accounts. So I think, and I hope you can see as we record those items, there is nothing we are skipping. But in this case, first of all, we are going to skip 2 items there. That is capital account and also the current. Because this capital account and the current account, who can be able to remember, where do we record those 2 items? The capital account balance and the current account. When closing off the books of account of the partnership, where do we record those 2 accounts? Those balances, the balance in yes, the balances in current account and capital account, we cross them off to the partner's capital account. And I hope you can see that is what we are required to prepare in part B of that question. So we skip those 2 items, capital account balance and the current account, and we go to where we have liabilities. Liability, we have non-current and current. So what are we told regarding this particular bank loan? There is some information which you are given as far as that bank loan is concerned. Can we go to the additional information number 2? In the additional information number 2, we are told that the bank loan or the bank, that is, the bank that had provided the loan agreed to accept 43.2 million, 10% debentures in P Limited and 28.8 million of the 10% debentures in what? In Q. What does that mean? It means that the bank loan, which was a bank loan of the partnership, this one was transferred to the new companies, and the new company immediately paid this bank loan, immediately by issuing debentures. So therefore, what is important to note here is that the bank loan was taken over, was transferred to the new company. And therefore, this is one of the liability which was transferred. So therefore, that bank loan was transferred now to the 2 companies. And actually, in this case, we are told that the bank loan which was transferred to the first company was 43.2 million, and the bank loan transferred to the other company, that is Q, is 28.8 million. So can you add this? You see whether it will give us the value of the bank loan in the statement of financial position. Will that give us 72 million? Yes, it will give us 72. But it's also important to note that once this bank loan was transferred to the new companies, it will be paid immediately by the new companies in terms of issuing what? Debentures. In other terms, what that means is that when preparing the statement of financial position of the new company, we are not going to have a bank loan, but it is like this bank loan was converted into debentures. So under the non-current liability, instead of having a bank loan, we are going to have debentures. We are going to have what? Debentures. So therefore, the bank loan which was taken over by the first company, that is the P, was the 43,200, and then the one which was taken over by Q was 28,800, which will give us now a total of 72 million. Then we go back to the statement of financial position. We go to where we have current liabilities. Under the current liabilities, first of all, we have the bank overdraft. There is some information you given in relation to the bank overdraft in note 1. Bank overdraft in note 1 was taken over by which company? Bank overdraft as per note 1 was taken over by which company? Yes, it was taken by P Limited. So P Limited took over the bank overdraft. The bank overdraft was 537,000. So no bank loan was taken over by Q. And then below that, we have trade payables. Trade payables relating to export business were taken over by P. That's what we know. Any asset or liability relating to export was taken over by P. Any asset or liability relating to oil processing business was taken over by what? By Q. That's what we know. That's what we know from our analysis there. So basically what that means is that we have also recorded all the liabilities which were taken over. We have recorded the assets taken over on the credit side. We have recorded the liabilities taken over. Now, in this question, I've said we are not given the total purchase consideration. But if we go back to note number 1, we are given the goodwill. So can we go back to note number 1? Can we go back to note number 1? In note number 1, there is somewhere we are told, I think in sentence number 3, we are told the asset and liabilities in sentence number 3 of note 1. The asset and liabilities were transferred at book value, and the partners were paid 300 million, being goodwill for oil business. For oil business, the partners were paid a goodwill of 300 million and 240 million for export business. For export business, they were paid a goodwill of what? Of 240. Basically, what we know is that once we have balanced this account, goodwill arising from business acquisition is supposed to be credited here. Any goodwill should be credited in this account. And the goodwill which was paid by P, you have to be very careful here because those figures were interchanged. The goodwill paid by P Limited, automatically that is the goodwill relating to the export business. And how much goodwill was paid in relation to the export business? A figure of what? A figure of 240. A figure of 240. So that one we recorded here. How much goodwill was paid in relation to oil processing business? 300. And this was paid by which company? By Q. By Q Limited. By Q Limited. So we have that. We have that. What does that mean? What does that mean? It means that in this particular question here, there is something which we are not given, which is goodwill. Sorry, not goodwill, but rather the purchase what? Consideration. So therefore, the balancing figure on this side, the balancing figure on this side will be what? Will be the purchase consideration. Will be the purchase consideration. That will be the balancing figure. That will be the balancing figure. And actually, you can see this particular question, provided you remembered that particular format, there are so many free marks there. So many free marks there. Sasa? Yes. So therefore, what we need to do is we balance this particular account. We balance this particular account, and we get the balancing figure here. So how do you balance? So automatically, the totals of the credit side will be more. So what you do, first of all, get the totals of the credit side, and then you less what we have on the debit side. Yes, we try to hurry up so that we finish the question on time. I can see our time is moving very fast. Moving very fast. So just give me the balancing figure. Don't give me the totals. Just add on whatever you have here, less what you have on the debit. So I'm given here 3,156,000. 3,156,000. 156,000. 156,000. What about the balancing figure here? So whatever you're given in note number 3, I think as is, that is the amount paid to the partners. That is the amount paid to the partners. I will show you where to use that information. That is the amount paid to the partners, but not the total purchase consideration. So on this side is 16 what? 1651,800. 1651 what? 800. So basically that is a balancing figure, and it represents what? It represents the purchase what? Consideration that was required in that particular question. And basically by recording those particular items there, then you got how many marks? 6 marks. Sasa, yes. So that is it. Then what we need to do, because of my space, I will have to do away with this particular account, and then we prepare. I think there are 3 accounts there, which we are going to prepare concurrently. There is an account, first of all, I want us to skip the bank account. The bank account, we are going to skip that. But I want us, first of all, to prepare the partners capital account, and then the vendors account. So what is the other name of a vendor? Who is a vendor? Because that is something you also needed to know here. When talk about a vendor is who? A supplier, a creditor, a supplier. Yes. So basically a vendor is like a supplier, or in other terms. So when talk about the vendor here, we are talking of the selling or a seller, that is. So therefore, this account is what in our previous session we refer to as the selling firm account. Selling firm account. Basically, we said that this is an account which is prepared in the books of account of the new company. The new company will prepare an account which is called what? The selling firm account to record the purchase consideration, which was to be paid to who? To the partners, which was to be paid to the partners. Okay, I don't know whether we are going to, maybe we don't need to follow that the order which those accounts were, we don't need to follow that order. We don't need to follow that order. Okay, so let's, okay, so let's first of all, we do it away with this particular account, and then we prepare the partners capital account. The partners capital account, I need to do away with this. So there is some correction here. I'm sure there is a correction. The correction is on what? For Q, the correction is on what? Q, 1538, 1538. Q, 15 16 51. This is okay. What about this one? Is it for P? Is how much? The balancing figure for P is how much? $1651,800. Oh, this one for P. Okay. This one for P. Okay. And then okay, that 156,000. Is that correct now? This 153. 153,800. Is that correct now? Okay, sawa. Okay, so I think then what we need to do, let's do away with this particular account here. Let's do away with this particular account. But this purchase consideration still, we are going to use it. We are going to use it maybe in preparing the other accounts. So then let's prepare the other account, which is the partners capital account as required in part B. The partners capital account, that is part B. Partners capital account. So this particular question looked a little bit tricky, but it was a very simple question because as you can see, provided you remembered the format, then there were so many free marks. There are so many free marks in that particular question, because you can see like in that account, the business purchase account, there were so many entries there. And remember what we said is that in terms of how these particular questions are marked, they are marked based on the entries, which you make, So also in this account, you can see we have some free marks there. Yes, so this is the partner's capital account. This now will be the details column. Remember, this is the credit side. And this is the debit side. So we need to have the details column, and actually columns equal to the number of partners. How many partners do we have in this case? So we know that we have two partners. We have R and M. We have R and M. R and M. And also our figures here are in thousands of shillings. So what do we start with? What do we record first in this account? So the first item we record in this particular account here, the partner's capital account, is the balancing figure, or basically the opening balance in the capital account. We go back to the statement of financial position. In the statement of financial position, we pick the partner's capital account balances, and those balances are credit balances. We record them on the credit side. For R, 1.5. For M is 900,000. Then what else do we record here? The partner's current account. And those partners' current account, those are credit balances. But there are some cases whereby we said that a current account of a partner may be having a debit balance. So if a current account of a partner has a debit balance, when that figure is given in the statement of financial position, is always given inside the bracket as a negative figure. A negative figure means that is a debit balance. But taking into account both figures are positive, then it means that those are what? Those are credit balances. So we have 78 for R, and then for the other partner M is 72,000. 72,000. That's basically what we have. Then we say that the number of items you need to check, like in this case, are we given any information about salaries to partners? No, which should be on this side. Are we given anything to do with commission on partners? No. Interest on capital? No. Share of profit? No. We don't have all this. But we said there are other items which we record here. For example, once we have prepared the realization account, and I hope you can see this question, the examiner didn't require the candidate to prepare the realization account, but we are going to prepare that account here as our working, as part of the workings. Why do we need to prepare that account? To determine whether the partner sold their partnership business to the company at a profit or at a loss. So that we determine the gain or loss on realization, which then will be shared among partners using their profit and loss sharing what? Ratio. Sasa? Yes. So once we have determined that gain or loss on realization, we said if we have a gain, it should be credited in this account. If a loss, it should be debited here. And then we said we balance this account. The balancing figure, which will be on this side, it represents the amount of money which was paid to each of the partner, to each of what? Of the partner. So therefore, even before we come back to this account, there is something I want us we prepare here. But remember, this is purely a working, because the examiner was not requiring the candidate to prepare this account, the realization account. So why do you have to prepare this account? You have to prepare this account to determine whether the partnership business was sold to or was transferred to the new company at a gain or at a loss. And the figures here are in thousands of shillings. So you just need to remember, what do we record in this account? So who can be able to remind us? What do we record on the debit side? What do we record on the debit side of this account? The realization account. What do we record on the debit side? What do we record on the debit side? On the debit side, who can be able to remember? Yes, we record the assets which are transferred or basically the assets which are taken over at their book what? Value. The assets which are taken over. The assets which are taken over. And basically what we know is that all assets, non-current asset and current asset, were were transferred to the new company, were taken over by the new company. So what we are going to do, we are not going to record those assets separately here. We are going to get their total because we know all assets were transferred or were taken over by the new company. So therefore, from the statement of financial position, we have the value for all the assets. So can you see that values here? The total assets. Total asset of the partnership had a value of how much? 43 what? 43, 42, 39. 42, 39,000. So all these particular assets, we know they were transferred, they were taken over by the new what? A company. So what do we then record on this side? On the credit side, we record liabilities which were taken over. And also what we know is that all liabilities, non-current and current, were still taken over by, or were still transferred to the new what? Company. So can you give me the total liabilities? The total liabilities, what you'll do, you'll take the bank loan of 72,000, and then you add the current liabilities, which are downstairs, 17,000. 17,000. You give me the total here. These will be the total liabilities. Total liabilities, bank loan and the current liabilities. Bank loan and the current liabilities. I'm getting these figures from the statement of financial position. 1689,000. 1689 what? Thousand. So that is the total liabilities. Then what do we also record on this side? On this side, we also record the purchase consideration. So in this case, we have the purchase consideration which was paid by P, the purchase consideration which was paid by Q, which we have already determined in our business purchase account. In the business purchase account, we have determined that purchase consideration. That purchase consideration, how much purchase consideration was paid by P? Purchase consideration paid by P, 1651,800. Purchase consideration paid by Q. Purchase consideration paid by Q. It was how much? By Q. By Q, 1538,200. 1538,200. 1538,200. So basically, that's what we credit in that account. Liabilities taken over and purchase consideration. And purchase what? Consideration. Then from there, what do? We balance our account. We balance this account. And any balancing figure on this side, we said is a loss on realization. A balancing figure on this side is a loss on realization. Any balancing figure on this side is a gain on realization. And this is supposed to be shared among partners or between partners using their profit and loss sharing ratio. Using their profit and loss sharing ratio. So we are going to have a balancing figure of how much? A balancing figure of what? A balancing figure of what? A balancing figure of 640. Yes, 640. Is it a loss or a gain? A loss or a gain? A gain of 640. A gain of 640. So this particular gain then, how do we account for it? You can see this account is debited. Is debited. So we complete the double entry by crediting this account. So we have the gain on realization, and this one will be shared between our two partners using their profit and loss sharing ratio. Using their profit and loss sharing ratio. So what is the profit and loss sharing ratio for our two partners? That is given in paragraph 1. A profit and loss sharing ratio. Profit and loss sharing ratio is given in paragraph 1, which is 2:1 for R and M. So mean that the share of profit for R will be 2 all over the total 3. For M, it will be 1 all over 3 times 640. Times 640. Times 640. Times 640. So this will give us a figure of what? This will give us a figure of what? I'm doubting that figure. I'm doubting this figure. This figure, the balancing figure, I think should be 540. Why is it coming to 640? Is there anywhere we have made an error? Because those figures you're getting should not have those decimals. Should not have those decimals. Should not have those decimals. Those decimals. Those decimals. Yes. Is there anywhere we have made an error in terms of these figures here? The balancing figure here, I think, should be 540. 540. 540. Okay, before you distribute that, can you counter check this figure? This figure, is it correct? 640? Because I think the correct figure should be around 540. 540. I'm told is 638. Kuna mari tumekosea in terms of our addition here. 639. Just confirm, you guys. You're giving me so many figures which are different. 640 is okay. 640 is okay. 640 is okay. I hope all our additions are correct, including the computation of those purchase considerations there. I hope all those additions are correct. I think the correct figure should be around 640. Not 640 actually. We used 1651,800 instead of yes. Can you counter check? You make sure those figures are correct, because I don't think that figure should be 640. The correct figure, I think, should be 540. 540 if I'm not wrong. 540. Can you counter check? Just counter check. Especially from the determination of that purchase consideration. 1651,800. Yes. So can you check this figure for Q? This figure for Q, is it correct? That figure for Q. The figure for Q, is it correct? For Q, this purchase consideration as far as Q is concerned. Is it correct? Someone to quickly confirm. Iko sawa, because yes, I can see is a figure of 1438. 1438. 1438. 1438, because the balancing figure here should be 540. I don't know. I don't know why it's coming to 640, but I can see like this figure, it should be 1438. 14 instead of 15. 14. Is there anything we recorded wrong with those figures for assets and liabilities? Those figures for assets and liabilities in our business purchase account. In our business purchase account, do we recorded all those figures correctly? The trade payable should be 15. Yes, I can see there is a figure which is changed. Trade payables. Can you check the trade payables for Q? For Q Limited, can you check the trade payables? Is it 156 or is it 56,000? Which is which? Because I can see there is a figure which is altered there. There is a figure which is altered there. Yes, and what did we recorded in our case? What did we recorded? Did we recorded 56 or 156 in our business purchase account? We recorded 56. We recorded 56. Yes, can we then do this? We go back to the statement of financial position. We go back to the statement of financial position, specifically under the current liabilities. Under the current liabilities, can you add the bank overdraft? You add the trade payables for export and for oil, which is the 537,000, 924,000, and 56. You see, will this give us 17,000? Will it give us 17? Yes. So this figure is the one which is long. So this one should be 156. This one should be 156. Sasa? Yes. So I think there was a problem with the figures here, because I can see in the solution it was changed. It should be 156. So just change that. If you have the physical paper, put that as 156. 156. And then what you do, you go to our business purchase account, you change it to 156. You change it to 156, meaning that the purchase consideration paid by Q will also change. Will also change this one. This one will change. It will be 1438. 1438. Yes, because this question should not have a decimal anywhere. That's why you can see once we share out this, we are having some decimals. Sasa? Yes. So the wrong figure should be this one. Should be 156 and not 56. Sasa? Yes. So meaning that this then will be 1438. Is that correct now? Have you understood what I've said? We have said that this figure is the one which is wrong. You change it to 156, meaning that this purchase consideration will also change. Munga, put off your video. You don't need to have your video on. You may be affecting the others from getting my video. So you don't have to your video does not need to be on. Okay. So I think with that now, we can then proceed and distribute this profit, this gain. It is 540, not 640, not 640. So remember this question I've said it was it is this question which was repeated. So I think the guy who was trying to change those figures messed up with one of the figures here. Messed up with one of the figures. That's why you can see we have that problem. That's small problem. So therefore, can we distribute that amount here? So I'm given what for R is 360, and then for this other partner, it will be what? It will be 180. It will be what? It will be 180. And I don't think we have anything else to be recorded in this account, because on this side, we don't have drawings. We don't have any asset which was written off. We don't have any asset which was taken over by partners. Basically, what that means is that the balancing figure on this side will then represent what? The purchase consideration paid to R and also to M. To R and also to M. So we also interchange the no, Regina, the problem was here, that figure here. This figure here. That was the problem. That amount there, that figure. Yes. So let's now do this because of time. Because of time, give me the balancing figures here, which will be on this side, and it basically represents the purchase consideration. It represents the purchase consideration, So give me those purchase considerations. So I hope 1938. I hope 1938 is for R, and then we have 1152,000. 1152,000. Is that correct? Yes. So if that is correct, then there is also something we can also confirm here. If you add this purchase consideration paid to R and also to M, that should also be equal to the total purchase consideration paid by the two companies. Can you add this and this? You get the purchase consideration paid by Q and P and Q, and that should be equal to the amount paid by to our two partners. Can you confirm whether that is correct? Just confirm whether that is correct. Is that correct? Yes. And now, if you go to note number, I think there was a note someone was asking about. Note number 3. So this note number 3, we are given now the amount, for example, which R was to be paid by P, and the amount which R was also to be paid by Q. But in this case, what we know is that the amount which R was paid is equal to this, but we know that this amount was paid by both P and Q. The total amount paid to M is this one, which was paid equally by the two companies. Sasa? Yes. So, but essentially, as far as this account is concerned, this is what was required. You can see also here there were some free marks. Like if purely recording those particular balances, there were some free marks. The minimum marks you can be given for any tick is half. So even if you recorded just those balances, you had the 2 marks allocated. Sasa? Yes. So it's not a must you have to record everything. So by purely recording those particular balances, then you had those particular what? Balances. Then what I want us we do before we prepare the bank account of the new company, the bank account, I think maybe first of all, we can record what? We can prepare, that is, can we prepare the vendor's account first of all? Let's prepare the vendor's account before then preparing the bank account. Before preparing the bank account. So let's prepare the vendor's account, which is now part D. Vendor's account. Vendor's account. Vendor's account. Vendor's account. Just give me like a minute, please. 1 minute. Yes, so let's continue. Let's continue. I want us to prepare this account here, the vendor's account. Remember, in this case, you have said the vendor is basically the selling or the seller. So in this case, what the examiner was requiring the candidate here to prepare is what is known as the selling farm account. Selling what? A farm account. Selling farm account. Selling farm account. So when talk about the selling farm, this is basically the partnership. Remember, the partnership sold its business to the new company. So, and this account is supposed to be prepared in the books of account of the is supposed to be prepared in the books of account of the company. So what do we record in this particular account here? So the purchase consideration which the company was supposed to pay, this purchase consideration, number one, if you can remember, we have said it's supposed to be debited in the business purchase account, in the books of account of the company. We debit it in the business purchase account, and then we credit it in this account, which is called the vendor's account or the selling farm account. Remember, you said the partnership is a creditor to the company. So therefore, what we record on this side is the purchase consideration. The purchase what? Consideration to be paid by our two companies here. So, and I think we can just put that purchase consideration. The purchase consideration to be paid by Q. The purchase consideration to be paid by Q. That is by P and also Q. And I think we have that purchase consideration here. 1651, 800, 1438, 200. 1438, 2 what? 200. 200. 200. 200. Victor, this cannot be the same with the business purchase account. I think we have already prepared the business purchase account. in Roman 1. So this cannot be the same with the business purchase account. Sasa, yes. So the purchase consideration which the company is supposed to pay, debited in the business purchase account, credited in this particular what? Account, credited in this account. And then this account, we need to balance it off by accounting for the payment of this purchase consideration. So how was this purchase consideration paid by the two companies? Who can tell us? How did these two companies pay this purchase consideration? How did the two companies pay this purchase consideration? We have that information somewhere. By debentures, no. So this purchase consideration was paid by the two companies issuing shares. Issuing shares. And I think now we are given that information in note number 3. That's where now note number 3, that's we are going to use note number 3 here because we are given the shares which were issued by each of these two companies. Each of these two what? Companies. So let's compute that purchase consideration or the payment of purchase consideration by what? By P Limited, because we know the purchase consideration paid by P and purchase consideration paid by Q Limited. And this purchase consideration, which was to be paid by these two companies, remember it was to be paid to the two partners. These two partners, that is M and who? R and M. R and M. So, and also what we know is that we know the purchase consideration to be paid by P, to be paid by Q. So the purchase consideration to be paid by P, this is 16,51,800. The purchase consideration to be paid by Q is 14,38. And also in our case, we know the total purchase consideration to be paid to R and M. Can you remember those figures? We have them here. The purchase consideration to be paid to R is 19,38 and the purchase consideration to be paid to M is 11,52 And actually what you have said is that if you add whatever you have here, you add this and this, and also you add this and this, that should give us the same figure. That should give us the same figure. Is that the case? Is that the case? Was that if you add this and this, and this and this, should it give us the same amount? Yes. So give me that total here. Give me that total here. 30 what? 30, 90. So that is the total purchase consideration paid by the two companies and also the total amount paid to each of the partners. So what we want to do here is basically to determine the purchase consideration which was paid by P to R and M, and also the purchase consideration paid by who? By Q to R and M. Let's do that computation as per note number. We go to note number 3. We are told on 1st of October 2023, the purchase consideration was settled by allotment of fully paid ordinary shares of shillings 20 each in respective companies as follows. So first of all, you're given the amount which was paid to R. The amount which was paid to R, the amount paid to R. So R, we are told, was issued with 71,250,000 shares in P. In P. So can you first of all multiply that? You take the shares which were issued by P, 71,250, you multiply them with their par value. Remember the par value for each share is 20. So 71,250 times 20 times 20. That will give us what? That will give us what? 71,250 times 20 times 20. And you have to remember all these particular figures are in thousands of shillings. If that is the 71,250 times 20 times 20 is giving us what? 25,000. 25,000, is that correct? 1425. Yes. So this is a purchase consideration which R was paid by P. R was paid by P. 1425,000. 1425. So, and because in our case we know the total purchase consideration which was to be paid to R, it means that the difference between this and this is the purchase consideration which R was paid by Q. So the difference, this and this, can you get the difference between these two figures here? Is the purchase consideration R was paid by Q. So which is 5 what? 13. 513. That's why you can see in that case we are told, and the balance in Q limited. The examiner has not given you the amount R was paid by Q. So, and then we are given the amount which M was paid by Q. So M was paid by being issued with 760 shares by Q. 47, multiply that, 47, 760 times 20. So this is the amount which M was paid by Q. M was paid by Q. So that is giving us 955, 200. So basically the difference between this and this is the amount M was paid by P. M was paid by P. The difference between this and this is the amount M was paid by P. How much is it? 186, 800. 186, 800. Such that if we add the two, it will give us that. Yes. So basically here now we have the payment of purchase consideration by the two companies. By the two what? Companies. So therefore, what we know is that these two companies pay the purchase consideration by issuing shares. So the shares which were issued by the first company here, that is the P issued shares which had this value to pay both R and M. So therefore, this company issued shares which had a value of that. So there is no need of splitting that, though you can split it here, no need of that. And then the shares now which were issued by Q, they had a value of this. Okay, so we need to split this to show the shares which were issued by P Limited and also Q. And I hope you can see the other entry here will be in the ordinary share capital of P and Q. So the ordinary share capital, the amount which will be credited in the ordinary share capital of P is this one, and this in the ordinary share capital what? Of Q. And now if you balance that account should automatically do what? Balance. Should automatically balance. Should automatically do what? Balance. So, and actually that's what was required as far as that part of that question is concerned. The vendor's account, equally by preparing that, you do what? You get 2 marks. You get 2 marks. I think finally, we can prepare now the bank accounts. The bank accounts of these two companies. Bank accounts. Accounts. Which summation does not look correct? Which summation are not right? Which summation are not correct here? Yes, so let's prepare the bank accounts, And remember also here we are preparing the bank accounts for two companies. That is for P and Q. For P and Q. Which additions are not the additions are not adding up? Which additions are not adding up? Yes, then that figure you gave me for 186, 800 should be the one which is wrong. Yes, I hope you're talking of this figure of 186, which was the purchase consideration paid to M by P. Is that the figure you're referring to? So then I think this figure is the one which is wrong. If I'm not, I think this is the figure which is wrong. Can you take the total purchase consideration which was paid to who? To M. You less the amount he was paid by Q. You confirm whether it will give us that. Confirm. It should be 226,800. Yes, because I think that is the figure which is wrong. But that will not have any effect on this. That will not have any effect on this. So we just need to. Yes. So let's just proceed. That will not. I don't think that will have any effect on this. That will not have any effect on this. So let's just move. Let's just move and prepare these accounts so that we finish. So we prepare the bank accounts, and I hope you can see we're required to prepare bank accounts. We are preparing the bank account for P and for what? For P and for P and also for Q. For P and for Q. That is for P limited, Q limited, P limited, and Q limited, the bank account for these two companies. So in the bank account, we have a number of transactions. First of all, we know that there is a company which took over the bank overdraft. Which company which took over the bank overdraft? As per the additional information number one, the company which took over the bank overdraft was P, and therefore in preparing the bank account of P, that bank overdraft which was taken over from the partnership will be the opening balance in this account and also on the credit side. On the credit what? Side. So the bank overdraft was 537,000. 537,000. So the other company did not take over any overdraft. And then the number of transactions which are given, which were undertaken by these two companies, and which automatically will be recorded in the bank account. So I think additional information number one and number two, number three, I don't think those will affect this account. But if we go to note, I think we can actually start from note 7. Can we start from note 7? In note 7, you're given the formation expenses which were paid by the respective companies. So once a company pays the formation expenses, should that be debited or credited in this account? The bank account, formation expenses paid. Should that be debited or credited? Debited or credited a payment? Someone is saying we debit. Victor, do we debit expenses? Once you pay an expense, you credit. So the amount which was paid by P is 39, but remember those figures are in million, and our figures here are in thousand. We take it as 39,000. The amount paid by Q, 24,000. So then from there we can go to note number 6 is about goodwill. That has nothing to do with this. Note number 5, we are told P Limited and Q also issued 3 million and 4.5 million fully paid ordinary shares of shillings 20 each to two companies, E and F. The two companies, E and F, which bought the shares of P and Q, that is irrelevant. So we ignore those two companies, E and F. So what we just need to know is that these two companies, P and Q, they issued shares. So once a company issues shares, how do we account for the money received? So to account for the money received, we debit that in the bank account. The other entry will be in the ordinary share capital. So the shares issued by P, they were 3 million times the par value of 20. Times the par value of 20. 3 million, or basically 3,000 times 20. So this will give us what? This will give us what? Is it 60? 3 million, or basically we take it as 3,000 times 20. Yes, it will give us 60 million. This is the money received by P. And then for the other company, 4.5, 45. 45 times 20. So this will give us what? 90. It will give us 90. It will give us what? 90,000. Okay. So we are done with point number 5. And then let's go to point number 4. In point number 4, okay, yes. In point number 4, we are told that P Limited also raised, that is P Limited also raised 12% debentures of 600 million. So this company issued debentures, and you're told those debentures had a value of 600 million. So once a company issued debentures, how do we account for debentures issued? So the debentures issued or the money received should be debited in the bank account, 600 million in thousands of shillings. It will be like that on 1st of October 2023 and paid off the bank overdraft. We don't need to account for the payment of the overdraft because once we balance this account or anytime this money go to the bank, it will automatically be used by the bank in terms of doing what? Settling the overdraft. Provided we have recorded the overdraft here, any money coming in through the bank account will be used by the bank in terms of doing what? Settling that overdraft. So we don't need to account for the payment of the overdraft. So, and then we are told the expenses incurred in raising 12% debentures amounted to 21 million. So the expenses which were incurred, the expenses incurred in the issue of debentures, automatically those expenses were paid for by P Limited, and therefore because they were paid, we do what? We credit them here. Alternatively, you can take the amount which was received from the issue of debentures, 600 million, you less the issue cost. You only account for the net amount by crediting it, by debiting that amount here. Alternatively, you can record the amount received there and expenses paid on the credit side. Credit side. I think we are done with that. Point number 5. And then in point number 4, that is, yes, I think point number 3, 2, and 1, will they affect this? Will they affect the bank account? So where do we have preliminary expenses? I think we have already accounted for the preliminary expenses, the formation expenses here. The formation expenses in note number 5, in note number 7. So those are the same, I think, with the formation expenses here, 39 and 24. Yes, note number 6, note number 5, and then note number 4. Yes, I don't think we have anything else we have not accounted for. So I think what we need to do is to balance this account. So let's balance the bank account. Let's balance this account. Let's balance this account so that we finish now. So give me the balancing figure in the bank account of P Limited. The bank account of P Limited. P Limited. Which side? This will be 660. Is the balancing figure on this side? Balance carried down. Is it on that side? How much is it? For P? For P is how much? 63,000. What about for Q? For Q Limited? For Q, I'm told is 66,000. Yes. So, and basically what we know is that once we bring down this particular balance, these will be debit balances. Debit balances means that this was money now in the bank account, of those two companies. I think we are done now. So basically that's what was required as far as the preparation of the bank account is concerned. And I think the marks which were allocated there, were they equally 2 marks? Were they how many marks? 2 marks, 2 marks. So the good thing with this particular question here, you can see there were so many entries. So it means that for you to get those particular 2 marks, you don't the candidates were not supposed to record everything here. So if you can be able to make a number of entries here, then you could be able to get now all the marks allocated there. And I think finally, let's now prepare the statement of financial position, because that is quite simple. And equally, what you need to do to remember here is that we are preparing the statement of financial position for how many companies? 2 companies. 2 companies. So we prepare the statement of financial position of the 2 companies, that is P and Q. That is P and Q. P and Q. So we need to have 2 columns, P, Q. The figures are in thousands of shillings. So this one is quite simple because we have everything to be recorded here. So we start with the non-current asset. Non-current asset. So we know the non-current asset which were taken over by each of the company here. So this is just a matter of copy pasting. Just a matter of copy pasting. Just a matter of copy pasting. Copy pasting. Okay, so the first non-current asset which was taken over by P, we have Larded Buildings. Larded Buildings, we know that this was taken over by P. So, and actually it was taken over at the book value of 750. I'm getting these figures from the statement of financial position. Statement of financial position. Equally, you can get them from the business purchase account. Business purchase account which we prepared. So then we have motor vehicles. You can see the good thing with this particular question, it had so many free marks. So motor vehicle was taken over equally by P. So below that we have equipment, which was taken over at book value by what? By P still, 90,000. We have investment property, which was still taken over by P. Investment property. Investment property, which was taken over by P. By P. And then from there, which other non-current asset are we going to include here? Which other non-current asset are we going to include here? Yes, so we also have goodwill. We also have goodwill. In note number 1, the goodwill in relation to the first company here, P, is it the one which is 240? Because the P took over the export business. So the goodwill in relation to export was 240, and this one 300. 300, is that correct? Yes, that is correct. Then what else do we have to include here? The other item which you also have to include here are the what? The preliminary expenses. Can you remember the preliminary expenses? If, for example, you are forming a company and you incur some expenses, some formation expenses, those expenses, what you do, you capitalize them. You recognize them as an asset. You recognize them as what? As an asset. So therefore, we have the preliminary expenses. Preliminary expenses. So the preliminary expenses for the first company, note number 7, 39,000. And for this other company, they were 24. These ones are supposed to be capitalized. And then capitalized means that they are treated as an asset and then they are supposed to be amortized or basically written off over a given period of time. Okay, so I think we have what else do we have here? I don't think we have any other asset here. Any other non-current asset. Any other non-current asset. So then, or we have any other? I don't think so. So then from there, we record the current assets. So for the current assets, we go back to the statement of financial position. We have the cash in hand. Cash in hand, we know, was taken over by P, 3,000. And then we have the trade receivables. Trade receivables for export, they were taken over by P, 384. For oil business, were taken over by the other company, that is Q. I hope that is correct. Then below that, we also have inventory. For export, were taken over by the first company, that is P, 1,380,000. 1,380,000. And then we have 675 what? 675. Yes. And then we also have to recall that we have a bank balance. The bank balance, was it coming to 63,066? The bank balance was coming to 63 and what? 66. 63 and 66. Then I don't think we have anything else here. So what we need to do is basically to get what? The total assets. The total assets. Total assets. So before we get the total assets, let's proceed and we record equity. So for equity, first of all, we are going to have the ordinary share capital. Remember also here we are having two columns for P and for Q limited, for P and for Q. For P and for Q. Now for the ordinary share capital, there are two items we are going to add. First of all, we have the ordinary share capital, which was issued to pay the purchase consideration. And we have the shares which were issued for cash. So what you'll do, you'll take the shares which were issued, for example, by the first company here, P, to pay the purchase consideration. To pay the purchase consideration. This one, you can get it in the vendor's account. And then we also have now the shares which were issued for cash and which were not in note number 5. The ordinary shares which were issued for cash by this company had a value of 60,000. So how many shares were issued by P to pay the purchase consideration? P issued shares having a value of what? Was it the one which was 1615? Get that from the vendor's account. Yes, 1651. 1651,800. So add these two. After adding that two, it is giving us what? It is giving us 17 what? 17,11,800. So we do the same for the other company Q. Take the shares which were issued to pay the purchase consideration. Was it 14,38 something? And then the shares now which were issued for cash, which had a value of 90,000 as per note number 5. As per note number 5. So these shares had a value of what? 14 what? 14,38,200. So this will give us what now? 15,28,200. 15,28 to what? 200. So basically that is now the what? The share capital. The share capital. Is that figure Gideon correct? Yes. So here I don't think we have any other component of equity because we don't have capital reserve. We don't have any other component of equity. And then from there we proceed record non-current liabilities. So the non-current liabilities, these will include now the debentures. Remember, there were some debentures which were issued by these two companies as per note number 2 to pay the bank loan, and also as per note number 4. So the debentures which were issued in note number 2, we are told that the bank loan, the bank that had provided the loan agreed to accept 43.2 million of the 10% debentures. So basically what that means is that we have those particular debentures as which were issued as per note number 2, and these are 10% debentures. These are 10% debentures. So the debentures which were issued by the first company here, that is P, they had a value of 43,200 million. 43,200 million, which were issued now to pay the part of the bank loan, which was taken over by P. And then the other company here, that is Q, issued 10% debentures, which had a value of 28,800. 28 what? 800. 28,800. Okay, then in note number 4, let's go to note number 4. We are told P Limited raised 12% debentures of shilling 600 million. So this company, that is P Limited, also issued 12% debentures, 12% debentures having a value of 600 what? 600 million. 600 million. So the other company did not issue 12% what? Debentures. And therefore, what is important for you to note is that that particular bank loan, which was taken over from the partnership by the two companies, it was repaid, or it was paid in full by the two companies, issuing the 10% what? Debentures. Sasa? Yes. Yes. So I think here we are done with those particular non-current liabilities. Non-current liabilities. I think finally now what we need to record are the current liabilities. The current liabilities. So which were the current liabilities taken over? So we can get this from the statement of financial position. The current liabilities which were taken over, one was the bank overdraft. Are we going to record the bank overdraft here? Are we going to record the bank overdraft here? No, because we know that that bank overdraft has already been repaid, has already been paid. So therefore, I think the only liability which we are going to have here is the trade payables. The trade payables, and the trade payables for export were taken over by P Limited. Trade payables for oil, they were taken over by what? By Q. By Q. I don't think we have anything else we are going to record here. So what that means is that we need to get the total equity and liabilities. So let me change my battery so that we finish. Just a minute. I changed my battery. Just a minute. Yes, so give me those totals. Give me those totals here. Yes, yes, yes. There is a correction which I'm told here. Yes, I need to remember that. So these particular debentures, these which were issued by P, remember there was a cost which was incurred. So that cost we said should be offset from this figure. Because once the company incurs some costs, for example, during the issue of shares, during the issue of debentures, what the company accounts for is the net amount received. The net amount received. So this should be 600 minus now the cost which was incurred. Was it 12,000? Yes, I think it should be 12,000. Should be 12,000 like that. I think it should be 12,000. So you can tell me whether now it will balance. Oh, this one was 21. 21. Okay. So if it is 21, it means that this will be 5 what? 579. 570. 570. 579 or 71. Yes. So can you just confirm now whether it will balance now? We rate balance. We rate balance. Will that statement of financial position balance? Hoping there is nothing we have not recorded. Hoping there is nothing we have not captured here. Oh, okay. Oh, trade payables, remember. I remember there is a figure which we also changed here. This one should be 156. Should be 156. 156. 156. $156. Yes, it is balancing at which value? It is balancing at a value of what? At a value of what? I hope that is for P. I hope that is for P. I hope that is for P. And then this one I'm told is balancing at that value there. That is the balancing at that what? Value. Yes. So the question is a little bit demanding, but I hope you can see it's a very good question, because the beauty with that particular question is that it has so many free marks. It has so many free marks. Like, how many marks are allocated to this? How many marks were allocated to this? Are they 10? 8. Yes, you can see there are so many free marks, because by even recording these assets, which you don't need to compute anything, you are given these, all these assets are given, cash in hand is given, receivables is given, inventory is given. Maybe assuming even you are not able to prepare that, you are not able to include that here. What else is given here? Payables are given. Payables are given. Payables are given here. Yes. And even this particular debentures, you should get them, these ones. Maybe assuming even share capital not able to get. So you can see there are so many free marks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So the minimum marks can be allocated there can only be half. So basically that means that is 6.5. So the nearest whole number should be 7. So it means that is a question, even if you're not able to compute most of these items, is a question still which you could have gotten like 6 marks. Sasa, yes, which you could have gotten like 6 marks here, which you could have gotten 6 marks. Yes, I think we say the overdraft was paid. Once you have recorded the overdraft on the credit side, and then what the amount received in the bank account you recorded in the bank on the debit side, it is automatically that overdraft will be offset, will be paid off. Sasa, so the other option, which was, or the other alternative or the other option of preparing that bank account is you fail now to record the bank overdraft as an opening balance on the credit side, and then you account for its payment by crediting it in the bank account and then debiting it in the bank overdraft. That is the other option. But the easy approach is you record the bank overdraft as an opening balance on the credit side. Anytime money is coming in the bank account, it will automatically be used in terms of offsetting that overdraft. Sasa, yes. So therefore, I think what we need to do is stop at that point. But what you'll do, can you attempt now that other question for the for May 2016, which is question number 3? But the two questions are the same, but you can just do it without referring maybe to this one. You see, can you be able to remember what you have been able to do? Sasa, because the two questions are the same. So what happened is that this particular question was altered, and then they brought this particular question here. Sasa, yes. So I think for today we stopped at that particular point, and I hope you also checked on the other question, the question which I gave as an assignment. Was it for May 2019? Yes, and I think the video was shared in the class WhatsApp group from my YouTube account. So make sure you check on that particular question, sir. Sasa? Yes. So I think for today we stop at that particular point. And actually that also brings us now to the end of that particular topic for conversion of partnership into a limited liability company. So it means that once we meet in our next class, we are going to look on a different topic. And I hope still you are revising. Right now you have less than 2 months to exam, or can we say it is exactly 2 months? Yes, so you start, you need to start revising as early as now. So let's stop at that point. See you on Thursday as we start on a new topic.